What's going on, everyone? The markets showed extreme strength into the close today. The overall stock market was green today. The crypto markets did really, really well today as well. So in today's video, we're going to go over the stock market, the crypto markets, and everything, all that stuff. I also post every single day. I post all of my trades completely for free live on Twitter. If you guys are interested in doing that, go ahead and follow me. Also, I post a YouTube video every day going over in depth why I buy and sell every single play that I do live with timestamps. All right, so without further ado, let's get right into the video. Thank you so much for all of your likes, comments, and subscribes. In today's video, I want to start off by showing something very, very interesting, and I want to look at the chart of the SPY back in September of last year and look at the similarities that we see currently in the SPY. So as we can see here, the chart on the right is a chart of the SPY from September 2020, and the chart on the left is the current chart of the SPY, okay? So as you can see, last year we also skyrocketed into clear resistance, right? And we started to fall as well. So similar to this year, we skyrocketed into clear resistance and started to fall. Right. Another similarity is the MACD became extremely oversold. Very similar to what happened here. The MACD became extremely oversold here. You can see that. Right. And the MACD ended up working off of its oversold condition and failed at resistance. But currently, right, the MACD is nowhere near over. It didn't work off of the oversold yet, similarly, right? There's lots of more upside potential still left in the MACD. And we've already gotten up to that level of resistance that SPY got to last year, right? So which was the 20 exponential moving average, this exponential moving average line right here, okay? So what we also saw was there was a bear flag formed here, right? Very similar to what we see here today, also a bear flag, right? So essentially, if this pattern ends up playing out, what's going to end up happening is we're going to essentially chop around, maybe break above here, and then potentially stop up here at the 450, 451 area. And then into the end of the week, we would start falling even stronger if we decide to break above this level of resistance, because currently the SPY is showing lots of strength. It's showing much more strength than it did last year during this time, right? And again, this happened because of, quad witching of last year. There was lots of weakness, and we broke the bear flag last year and made new lows, right? So let's see if that happens again this year. If we did break, then we would definitely surely come back and retest this blue trend line. But the similarities are something to take into consideration. It's not an automatic reason for us to just automatically become blindly bearish. But, the fact that the SPY did bounce so heavily today and is still extremely oversold, that is a very bullish signal. But last year, it worked out very bearishly, and especially this Friday is quad witching, so there's going to be lots of volatility. So I just wanted to go ahead and share that quick little similarity. I found that very interesting. So what's next for the SPY? So if the SPY retains 444.76 and maintains above it and creates support, then that is a pretty bullish signal. And the next key level of resistance that needs to break is going to be essentially 448.72, which is the lows of these two candles here. If we start to close above that very, very important level of resistance, that is going to be very, very important for the SPY. And then essentially it would become very, very unlikely. It wouldn't become very unlikely, only because if we took a Fibonacci level from these two levels, this level was only going to be the 50% fib, right? But if we start to break above the 618% fib, then that is going to essentially bring the chances of us going down and breaking down below much, much lower, all right? Because usually when we do create a bear flag, If we cross back above the 618 level of retracement, the odds become much less likely that the bear flag is going to work. And then if we cross above the 786% fib level, then the odds are drastically lower, and it basically means that the bear flag is invalidated. Okay, so that's just something that we have to go ahead and take into consideration moving forward on the SPY here. Okay, otherwise, you know, huge strength. We just have to monitor how it works off of this oversold condition on the MACD and whether or not we can break above these levels of resistance. Okay, that should be it for the SPY. Now we can go ahead and check out the IWM. So the IWM did very well today as well. It reclaimed this level of support that we were monitoring, this green uptrend line. But then we also stopped at the 20 exponential moving average. We can also see that the MACD is oversold and the RSI moved up as well. What needs to happen now on the IWM is we need to see a break of 224 at least, and continued strength from the SPY and the NASDAQ. So if we break above 224, then essentially that would be somewhat around the 50% fib level of this move. And then, you know, a nice clean break above 225, 226 area would be much better for the IWM moving forward, right? But we need to take into consideration that if the market is going to be going lower, right? Where do people want to buy short? Do people want to go short down here and then have a target like down here? Or do they want to buy into shorts up here, make more money on the short, and still have that same target to the downside? So that's something that we have to take into consideration. That if they do momentarily bring back the market up, is this going to be an opportunity just to load up on more cheaper shorts? Or is that actually very, very justified strength? So essentially, we just need to see whether or not we can start to close above very key levels of resistance. So on the IWM, that would be 224.11. And aside from that, there's not really much else to look at on the IWM. So next, we can go ahead and take a look at the NASDAQ. The NASDAQ also showed extreme strength. It closed back above this 23.6% fib level at 377.39, which is a very important level to close above. The next level that it needs to close above is the highs of this candle here at approximately 374.22. If the NASDAQ closes above that level, that would be very, very strong and basically signal to a new potential all-time high. But that depends on how strong the SPY and the IWM would also move, right? And of course, the NASDAQ and the IWM are both heavily influenced by the 30-year yield and the 10-year yield. So we will go ahead and look at that afterward as well. Overall, you can see that the MACD is oversold. The RSI is bouncing as well, but the MACD barely bounced. But we had a very green day today, which means that shows that that is extreme strength. But, you know, this strength here should propel us into new all-time highs. But, you know, usually when these things happen, it needs to cross and close above key levels of resistance first. But currently, it looks like the NASDAQ can make new all-time highs, just purely based off of the technical indicators. But again, you know, these could be fake outs, and regardless of how I feel with the technical indicators, the price action needs to show closes above key levels. So there's the analysis on the NASDAQ. Of course, here are the levels of support and resistance that we will continue to play moving forward. Now we can go ahead and take a look at the 30-year yield. So the 30-year yield, very quickly, it's overbought on the MACD. And if the 30-year yield and the dollar both show strength, then that means that the NASDAQ will show strength, okay? And currently, it's having trouble crossing above the 20 exponential moving average. You can see it wicked with a red candle here. The MACD is overbought, and we worked off of extreme oversold conditions into overbought without crossing above levels of resistance. So that is not a good sign that this happened, okay? So we need to see and monitor how things are going to continue working out for the 30-year yield moving forward, okay? The next thing that we can look at is the 10-year yield. So the 10-year yield, if the 10-year yield and the dollar both do well, then the IWM does well. So the 10-year yield looks much more. It looks like there's much more room to the upside. You could see that there was a green day today. The MACD is still oversold. The RSI is flattening out, which means that there's a strength potentially to the upside. And we just need to monitor how that works out now as well. If it did begin to fall, then this would be a catastrophic position for the 10-year yield. And we would potentially come back and retest these levels of support. And if these break, then the IWM would potentially start to collapse as well. But essentially, we also need to monitor the negative divergence in the 10-year yield as well, because you could see that the MACD is falling, but the price of the 10-year yield is increasing. So that is negative divergence. So we need to, monitor how we respond with the yields and the bonds, and especially with Fed news potentially of them increasing rates again, and what that means for the overall stock market if things did happen in that way, right? So there's the analysis on the yields. Next, we have to look at the dollar, okay? So the dollar looks very, very similar to the 30-year yield in that it still could not break above the 20 exponential moving average. So it also worked off of oversold in the MACD and became overbought, but it still could not close above the 20 exponential moving average, which is very bearish. So we need to cross above these levels of resistance for us to continue higher. But the fact that we became overbought on the MACD is not a good signal. So we just need to continue monitoring the dollar overall and see how, it plays out in the next few days to weeks. So next we can go ahead and take a look at crude oil. And crude oil is doing exceptionally well. It's currently in an uptrend and it's really going parabolic, but it has somewhat of resistance now at the 23.6% fib level. Things became really, really overextended currently for the crude oil. So let's see if we can cross above this level here at resistance. If not, then, we're going to consolidate and create some sort of a base and then move on from there. But overall, crude oil looks very, very bullish as well. It shows lots of strength on the MACD, lots of strength on the RSI. Overall, it looks pretty bullish. So for now, that should be it in regards to the entire stock market. Next, we can go ahead and take a look at the crypto markets. So obviously, Bitcoin, broke above this very, very important level of resistance here, which was the prior highs here, right, at 47,419. And I said that if we crossed above that level, then things would be very, very bullish once more. So let's see if that plays out. If you took a trade as it crossed above, trading Bitcoin and Ethereum is honestly one of the easiest things to do in terms of technical analysis, because there are tons of people just looking at the exact same patterns and everything as you are. So a lot of people are just trading against these levels of support and resistance. So very, very plainly, if you weren't looking at anything else, you wanted to wait for a break of this level of resistance right here, which I was saying yesterday. And, if you wanted to enter as it broke here, where would you set your stop loss? A conservative stop loss would be, down here, right? The high of this candle would essentially be your stop loss right here at the at 46,000, right? But then your target would be up here to the 50,000 level. So that would have been a very nice and decent risk reward trade, and a pretty safe sort of bet essentially, because the MACD was extremely oversold. We crossed above levels of resistance while crossing above on the MACD, which is what I was saying would happen potentially yesterday. The RSI is also moving higher, and we are looking to close above the 20 exponential moving average. So all of those things are very, very important. And this trade would have been very, very profitable. But overall, now we need to see if we can maintain above this 50% fib level of this huge giant move, right? And the 50% fib level is at 47,197. So we need to see if that level can hold as support. If we can consolidate a bit, hold this level as support, and continue on higher, then this is a great entry point on a trade, especially with this lower level here as a stop loss, with this upper region as a target price to the upside. Oh, like that is a really, really nice trade, especially if Bitcoin does come back and retest this level and you still feel bullish about it. You can trade against those levels as well. So that's my analysis on Bitcoin. We can go ahead and take a look at Ethereum. Of course, Ethereum, it's lagging behind a bit from Bitcoin. And you can see that Ethereum is back at this resistance level here at 35.68. And it's currently trading at 35.64. So it's right below that level of resistance. So if Ethereum can cross above that level here, and then it can close above the 61% fib level at 35.92, that is going to be very, very bullish. And again, the same concept here in regards to a trade above this level. You can have a stop loss essentially down here at 3,400 if across above here, and then your target would be up here. So this is a nice potential trade that you can also take. And there's my analysis on the overall stock market. There's my analysis on the crypto market. Hope you guys enjoyed. And of course, I will see you guys tomorrow. Have an amazing day. Thank you.